Good morning, friends. PK Patel here from Midwest Corporate Credit. We're here with a client of ours, Josh Engels. He's a local home builder here in Wheaton, Illinois. How are you, Josh?
Hey, doing great. Thanks for having me, PK. Really excited for this interview.
So we're actually here at one of your projects. We're in the middle of a construction zone here. You guys could probably tell by the background and everything. Tell us a little bit more about this project.
Yeah, so this is a home we're building for one of our clients. We did another project for him actually on the north side of Chicago. He wanted to do a project in the suburbs here in Wheaton. This home with the finished basement is about 4,500 square feet.
Wow. You gave us a little tour of this place. I mean, it's got an open concept. I know it's hard to see right now, guys, but it's going to be done pretty soon. And tell us a little bit more about where you get your design ideas and who comes up with that. Do you have a team or do you do it yourself?
One of the best places to kind of get ideas is a website called Houzz, HOUZZ.com. There you get lots of great ideas. We do work with different interior designers too. But a lot of this is kind of our, looking at Houzz, looking at trends, looking at Instagram, and incorporating that and seeing what's the latest look. For example, the exterior of this house is a farmhouse look. And that's really what we've been finding what's selling today for top dollar. Because our client is an investor, just like myself. I'm an investor. We worked together actually in 2011. That's what
oh man.
when we first worked back. Yeah, that's when we first worked together. And so just like himself, we're also investors. He's building this essentially as a spec home.
How do you go about picking which neighborhood? This is an A neighborhood, almost borderline A+ neighborhood.
Yeah.
With schools and everything. So what are some of the demographics that you look for when you put up a house like this that's going to sell in the upper echelon of the price range?
One of the things as an investor, whenever we're doing a home, is we're looking at what's the market time for homes at that price point, what's the demand. That's really what we're looking at as market time, and then how much competition is there too. Because a lot of neighborhoods in Chicago, for example, might look lucrative a year ago, but today it's just overdeveloped. So these are all things, how many projects are currently going on in the neighborhood. So there's just a lot of factors that you definitely want to look at if you're looking to build a spec home or do a flip.
Right on. And when you bought this, was it a vacant lot or did you have to demolish an existing house that was there that was built in like the 40s or 50s?
Yeah, so great question. This, in Wheaton, there's not really a lot of just vacant land available that you can buy. So there was an existing ranch home. It was sitting on a slab. And so, yeah, we took that house down and then put up a new house. So if there was a basement, it might have been a rehab play, but the house, was almost leaning. I mean, it was pretty bad. So the actual investor that bought it and wanted us to knock down and build new where he was going to get the best return.
Here's the thing. I want everybody to understand that you didn't start off as a real estate superstar. So tell us a little bit about the first deal that you did.
Okay, well, the first deal that we did, everything that you could do wrong, we did wrong. So that was our first deal. We bought it sight unseen. It was actually over 100 years old, the house that we did. We came to find out that actually the house where it was sitting was not even its original location of where the house was originally built. So it was actually moved. Again, we did everything wrong. I mean, I did a lot of the work myself. We didn't really have any systems. We didn't have a scope of work. We kind of just winged it. We didn't really have the background and the education and just all the systems that we do now. So definitely from then to where we are today is just two different worlds.
Right on. And what was it that influenced you into saying, hey, you know what, this real estate investing gig might be a good idea or might be a lucrative or profitable industry to get into?
One of the biggest things that opened my head to real estate was Rich Dad, Poor Dad. I know you've probably read it. Almost every real estate investor, that's kind of like their taste into real estate for a lot of people. Great book, just opened my mind to what real estate can do for you. That was kind of my foot in the door. And so I told you about my first flip, but I actually bought my first rental property shortly after reading that book, learning about building wealth through real estate.
Tell us a little bit more about how you've been able to leverage funding and how important has it been for you to get leverage on your projects ever since you were new? Because you made some mistakes,
Yeah.
I'm sure, and I'm sure that some of them were forgiving, some of them were unforgiving, but what have you been able to do because of funding and leverage?
You should only borrow money when you don't need it. What I mean by that is if you're in desperate need of money, then your rates, your terms just become a lot higher. So my very first deal we used leverage on, we actually used credit to buy that first flip. So that was all through credit cards. So just like what your company does, we used unsecured lines of credit to buy that first property. We've done that, we've used hard money, we've used private money. At this point, our primary sources are bank financing and private money. And then, of course, we still use unsecured lines as well.
But I mean, at this point, you've developed and you've been in it for a number of years, and you're in the big leagues now. You're putting up new construction. This isn't something that a first-time investor would do, obviously. It took you a while to build yourself up from that first deal you did that wasn't even sitting on, the same parcel almost, right? So coming from there, if you didn't have access to funding, how would your business be different today?
To be honest, I don't know if our business would have ever taken off, because without the funding, at least initially, it would have taken a long time to save up to where we needed that money to do that first deal. So getting funding was just especially crucial in our business taking off. Otherwise, we probably wouldn't be here today.
Okay, wow. Or you'd be a much smaller company.
Smaller, yeah, absolutely.
Awesome. Now, where do you see yourself in the next 5 to 10 years?
Well, what I'm looking to do is to continue building. So at this point, we don't flip as much as we used to. We've flipped over 100 homes throughout the Chicagoland area. That's been everything. And I'm including new construction in there that we've done for ourselves. I'm including condos, I'm including houses. So various projects all the way from $1 million homes down to $50,000 condos. So pretty wide range. But really where I'm focusing my time and energy on is our construction company. So what you see here, us doing homes for mostly homeowners, and then our passive wealth, which is through rental property. I look at flipping houses today as more of a job. There's so many ways you can systematize flipping. Believe it or not, I've flipped homes that I've never stepped foot in, meaning we bought them, rehabbed them, and sold them, and I never stepped foot in the house, which is pretty cool. So we've established some really cool systems, but at the end of the day, it's still a job. No matter and you can only do that for certain price properties. You can't do that with like $1 million home,
right? Because
things will get overlooked. If you're doing like a $150,000, $200,000 rehab, you can do that. And you can have the systems in place, but it's still a job at the end of the day. So what I look at is with rental properties, you do the work once, you get a good property management company in there, and they take over from that point, and you let that asset create wealth for you, the rest of your life.
Absolutely. And I mean, you're also not exposed to some of the market cycles when you're in it for the long haul. Because we had a recession in 2008, 2009, and if you held on to rental properties, they got in trouble because they were, quote, upside down, but the property still cash flow, and a lot of them cashed out of it at a loss. And you don't have to do that when you're a long-term thinker.
Absolutely. I think that's one of the biggest mistakes I see people make is they're like, well, I'm upside down, so why do I keep it? Well, if you're making cash flow on the property, I mean, we never buy anything with the speculation in mind. It has to make sense today. And if it doesn't make sense today, we're not going to buy it. I think where a lot of people got in trouble in 07 and 08 is they're like, I'm going to buy this for $200,000, and then the appreciation on the house is going to be $220,000 even if I don't do any work. That's just pure speculation. And some people are doing that even now with rental properties, where they're like, well, I don't care if I make a cash flow on the property. Well, if you're not making cash flow at all, you're actually going to be losing money every year because you have expenses that are going to be unforeseen. How many liabilities can you hold like that, hoping that the market improves so you can sell for a later profit? So the cash flow has to make sense today, or we're not even going to touch it.
Absolutely. The greater fool theory, right? Someone's going to pay me more for this thing because the market's hot. I mean, that's gotten so many people in trouble. And that's an excellent point that you brought up. Now, what pieces of advice would you give to somebody that's viewing that is brand new in real estate and maybe is considering doing their first deal, they haven't done it, or maybe they just have one deal under their belt and they want to continue growing their business?
The biggest key, in my opinion, of being successful in this business is not relying on listed properties that are listed through realtors. If you're relying, and that's the MLS, right? If you're just relying on properties that are available to everyone, what's going to happen is you're going to pay fair market value for it. And as investors, where you make your money is by buying below market value. That's where you get your spread. You can, if you buy it right, and you rehab it right, you could screw everything else up and still make a lot of money in this business. So you focus on finding the right home and don't rely on what realtors are sending you unless it's some sort of pocket. We have gotten deals from realtors, but it wasn't listed on the MLS. You know, all of our best deals never were listed.
Wow, I mean, it's a bold statement. You could screw everything else up, but you get two things right. That's pretty bold, but I mean, it's true. So basically your marketing and your networking has to be such where you're able to get unlisted properties on a consistent basis and buy them under market value. Is there anything else that you'd like to share with a brand new investor?
Yeah, so definitely get connected with various real estate meetings. If you're watching this and you're in the Chicagoland area, I run a meeting. I'm going to plug my meeting. We meet on the first Tuesday of every month. What's great about my meeting compared to some of the other meetings out there is most of the investors in my group are actually active investors, meaning they're flipping, they're wholesaling, and like we see a lot of money and deals passing through my group. And so being around, not all real estate meetups are created the same. Some of them want you to sign up for a $50,000, mentorship thing. There's no real sales at my meetings. Like, we're genuinely there to help each other out and develop each other's businesses. And that's the kind of rooms where you don't want to be in a room where they say, you can only do real estate if you work with me, and I think a lot of that exists in real estate education, but connect with some different real estate education groups. Go to your 3-day initial seminars that you pay $500, $1,000 for. You'll learn so much at these, especially if you're brand new. You'll leave that 3-day weekend and your head will be hurting because of all the information you learned, but that's how you learn. And then YouTube, watching your channel, watching my channel. There's so many resources now available. When I started, we did not have. So there's so much information out there that's, not just our channels, but there's a lot of information out there. And never rely on one source because it's always going to be skewed to whatever their situation is. So you want to get different viewpoints and then make it your own.
Absolutely. I mean, every market is different. I mean, you have macro economy, you also have micro economies, and you have micro. I mean, real estate is so subjective, it comes down to the neighborhood sometimes.
Yeah, absolutely.
In Chicago, you could have one block that you would not want to walk at night.
Yeah.
And then the next block, I mean, the mayor lives there.
Yeah.
It's ridiculous. It's absolutely ridiculous. And that's market research, and you get that by being exposed to other people and getting additional information, right?
Yeah, I mean, that's very true for Chicago. I mean, we just sold one of our rentals, actually, we had in Evanston, where that was actually true. A lot of people think that Evanston has some rough neighborhoods. We're like right, the police, we talked to so many people, they're like, this is the cutoff, you're right on the perfect street. 2 brand new construction homes are going on next to us. It's like right on the edge, but you went west and then it became a whole different world. So yeah, understanding your pockets, that's crucially important. So if you're ever evaluating a property and you think, all right, this property should sell for this amount, you shouldn't just take one person's opinion of that. You should get a couple opinions of that and run it by a few different people. That was one of the mistakes we made when we started out, is we would rely on what one realtor would tell us what a house would sell for. We kind of took that to the bank, and then instead of taking it to the bank, went the opposite. We didn't make nearly as much as we did, or we thought we were. So really getting some different perspectives and evaluate who's giving you this advice and why are they giving you the advice. If a realtor's telling you it's going to sell for this price because they want you to hire them, it may be good advice, but get a second, third opinion on it.
Absolutely. The guys that are a little bit more seasoned, they've already done like maybe half a dozen deals, right? But they want to scale up. What tip or secrets can you give them to be able to do maybe dozens of deals on an annual basis like you do?
The biggest thing if you want to scale your business is scale your marketing. Let's just say you've done 5, 6 deals. People get overconfident. They get addicted to, I got to do my next deal. I got to do my next deal. I got to do my next deal. This becomes a very dangerous point in your business. And I've seen a lot of people get crushed at this point. So what you need to focus your energy on is making sure you're still finding those right deals. Don't necessarily get caught up on, hey, I have to do this many deals, but make up your marketing game. And so whatever you're doing to market to get those 5, 6 deals, double down, triple down, quadruple down on those marketing methods, but don't try to fit a round peg in a square hole. It will really mess you up if you do. Do what you did to get those initial deals, just scale out what you're doing. And you may have to get some other creative ways of finding deals. So for example, let's say you're sending out letters to probate. Well, maybe you need to go out and start flyering neighborhoods. I think that's one of the greatest way to find deals that you want to work. Just go out, meet the neighbors, go to code violations, but focus on those off-market opportunities, double, triple, quadruple down on that. And that's how you'll get it. And then also be cautious too of scaling with contractors too. I think a lot of people, they'll give a contractor too many jobs at once that they're not equipped to do. So I would say scale, but scale appropriately. Never give a contractor 2 jobs at once until they prove themselves on one from start to finish. Build your contractor pool up as well.
Right on. Now, this is a special one. All of our friends that are maybe beaten down right now, maybe they lost money on their last deal and they're in a slump and they're, moping around, woe is me, real estate sucks, I lost money. What message do you want to deliver to them?
Snap out of it. Definitely you're gonna win some. I mean, eventually, we've done over 100 deals. You're gonna lose money on some of those deals. I've never met anyone that's done over 100 and never lost money on one deal. So you need to really take a hard look at why did that deal go bad. Okay. And more than likely, going back to my initial, what I've been saying this entire time, is you tried to make a deal work and the numbers should speak for themselves. If the numbers don't make sense, you can't try to make the numbers to make sense because you're trying to do this 10th deal, this year. The numbers still got to make sense. Put more money behind the marketing and then get better deals.
All right, so basically stay with your discipline, your core competencies, just learn from your mistakes, right? And
absolutely.
It's always darkest before dawn.
Absolutely.
Right?
I don't care what business you're in, whether you're in real estate, whether you own a restaurant, whether you own any sort of business, you're gonna have difficult times come across. You gotta know that there's a light at the end of the tunnel and push through that, because many times you're right there between having like an incredible business, but sometimes you can't see it because you're stuck in the minutia, the daily grind, Right. Gotta think bigger and sometimes think outside of what are you looking at specifically? Look at it at a bigger scale. How can you learn from your mistakes?
That's awesome. Now, you went from just a single focus real estate investor to now you have multiple pillars of your business. Mm-hmm. What influenced you to go from, I'm just gonna flip houses, to offering additional services and branch out and diversify your portfolio of service offerings? Tell us a little bit more about that. What was that transition like? What was the strategic idea that you had?
I think we've actually had this conversation ourselves, PK, is you are a real estate investor too. So you have to look at it sometimes. I've built such a network through being active on social media, having my meetings. This is a very old example. You know, there were the people that went and panned for gold,
Sure.
and there were the people that sold the pans.
Sure.
So the people that actually made the most money, and it's funny when you read it, were actually the people that sold the pans. Now, some people did strike gold, right? But
Right.
it's very far and few between.
Right.
But a lot of the people that sold the shovels, the pickaxes, the actual pans, they made a lot of money too. So if your specialty is in a specific area of real estate, so for example, we brought our construction in-house because we wanted to really have control over our timelines, our budgets. And so by doing that, now we had a service that we could offer people to start building homes for other investors, for homeowners, doing remodeling for people. So it was something that we developed because it was a need in our own business, but then we monetized it. Let's say, for example, you're really great at doing video. You can sell your video services to someone else. You may be doing awesome videos in your business. You may be somebody that is really great at sourcing capital. Let's say you have a lot of connections, you used to work on Wall Street. You have a lot of people that have money that don't know where to deploy it. You could start a hard money lending company.
Sure.
So what are your strengths? What are your connections? And sometimes think outside of, hey, the only, flipping houses is the promised land, because there's so many ways you can make money in real estate. Identify those and then capitalize on those. So really your network is your net worth, is what I've found.
Absolutely.
And so since I have this amazing network, we keep adding businesses to that to really provide value to all the people I come across. And how can I add value to their business?
That's awesome. Parting thoughts, if somebody wants to, let's say, get in contact with you or go to your networking event, we're gonna post the links in the comment section. But what's the best way to get in contact with you and get involved with what you're doing if they're local?
If you want to check out my meetings, again, I highly recommend it. We meet at the Stan Mansion, it's in the north side of Chicago, on the first Tuesday of every month. You can visit flip2riches.com, that's FLIPTO riches.com, and there you see all of our upcoming meetings. And again, we cover all various topics from building wealth through owning rental properties. We talk about raising private money. So we have different topics every single month, but check that out. If you want to get connected with me, the best thing to do is just connect with me on LinkedIn or Facebook, which is just my name, Josh Wangels.
Sure, we'll be able to put those links all over in the comment section.
Yeah, absolutely.
But I can't wait to come back and see this place once it's finished. We'll definitely be back. You're gonna let us know, and we'll show you guys the finished product. It's gonna be awesome.
Yeah, this is gonna be a pretty incredible house. So you're seeing it right now, and it's in a rougher phase because the kitchen's not even in yet. The hardwood floors aren't finished, but once this thing is done, it's gonna be absolutely stunning. So can't wait to share the finished product with you guys.
Thank you so much for your time, Josh.
Absolutely.
Much appreciated.
Thanks again, PK. And again, man, we worked together so long ago, and you've been a mentor to me, so I really appreciate you having me on.
Thank you. All right, guys, over and out from Wheaton, Illinois.
See you guys. Thanks so much.
Bye.